Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Virgin Galactic SPCE. Now they just had their Q4 and full year earnings. So we're going to go over that today. We're going to talk about whether I sold or not. This is going to be a pretty brief video. There wasn't too much news, but stock has been, basically tanking to all-time lows. It's $3.83. It's just been doing worse and worse. Of course, we've had some volatility, of course, in the market as well. Nvidia just had earnings, and of course, it was kind of hard to keep up how amazing the earnings would be. So there's going to be some disappointment on that. There's tariffs. There's all this different stuff going on. But anyway, we're going to be talking about Virgin Galactic today. And I just wanted to briefly talk about the market cap of the company now. $110 million. Yeah, they didn't make that much. They made about $7 million all year last year. So the price of sales, of course, is still quite high. But it's really kind of coming into a valuation now where if they do end up keeping their promises, man, is it cheap right now? But should it be cheap? It probably should be cheap. We're going to be talking about that. So here I've got the last 4 quarters. This was Q4 2024. We had $429,000 in revenue. We're going to talk where that came from. Net income was $77.3 million loss. And cash has dropped a bit to about $656 million. Speaking on a year-over-year basis, yeah, of course, we had much more revenue before. Revenue down about 84%. Net income was down about 24%, which is good, down as in the loss was less, so 77 million versus 102 million. And we're going to get into specifically how this happened with less revenue. So stick around, it's an important thing. And cash is down about 33%. In terms of the whole year, like I said, revenue was just over $7 million, and we had a net income loss of almost $350 million. And again, cash is sitting at $656.7 million right now. So in terms of the actual, let's get this so you guys can see it here. Income statement here, like I said, $429,000. Spaceline operations dropped a bit, but one of the hugest operating expenses that dropped here was research and development, R&D. So it was about 53 million a year ago quarter. It's 28 million a year, or this quarter rather. And the reason that is they're now classifying that basically as capital expenditures, and that shows up, if I can show you here, that shows up on the balance sheet as property, plant, and equipment. So you see this huge increase year over year, 209 million versus 93 million. And basically what happens is this is expensed as depreciation and amortization on the balance sheet. As you can see here, it's gone up slightly, but we haven't seen that yet. So you got to keep that in mind. Total operating expenses went down significantly. But the reason that happened is just basically be how this research and development was classified, right? So it looks good on the surface, but it's not particularly the greatest in terms of them being more efficient. They are becoming more efficient, but it's just classified as being different. As well, this quarter they had a little bit less here as well. I mean, last quarter they had $1.6 million a gain for an unrealized gain on marketable securities. It was a loss of $939,000, so that made a slight difference. But that gave us a total comprehensive loss of $77.3 million versus $102 million a year ago. So an improvement, but keep in mind why that improvement is. Basic and diluted EPS negative 253 versus 520 a year ago. Talking about the statement of cash flows here, again, net cash used in operating activities, we're a little bit better in terms of the loss, $81 million versus $95 million operating cash flow loss. And also they talked about just briefly in their news write-up about they issued this quarter $29 million in stock. So again, that's how they're gaining some of their financial capital rather, to fund what we're going to be talking about next year. It's dilution, of course, but it's necessary at this point for Virgin Galactic. So I'm not going to go too much into their actual presentation because there seems to be less and less, and they seem to kind of be making the same promises as well. So this is the mothership here, and basically it's just talking about, and it's Eve as well as the mothership's names, basically talking about the capabilities of it. 50,000 plus feet, can lift a huge amount of weight, thousands of flight missions, and extendable flight durations. They're going to be looking at building another one of these next year. There wasn't too much talk about this on this earnings call, but there was, I think, one question regarding that, but there definitely wasn't a focus on this earnings call. Virgin Galactic also seems to be kind of leaning into more. It makes me wonder about how much demand there is for actual future astronauts. They talk about, for specifically here, you can see the difference in the middle here, HAL. So heavy, HAL stands for high altitude long endurance. So basically, excuse me, for test message research flights, stuff like that. It's a heavy derivative for government research opportunities. So basically, they'll be able to augment this very quickly. And as we've seen, they've been doing this a bit anyway, and this is how they've kind of been generating the revenue right now. But they talked about that for a little bit. I'm not going to go through all the other photos that they had. They had disclaimers on them that they were essentially proprietary, but it was basically the same sort of things you've been seeing. Their tooling. I would recommend watching this video here. I'm going to have a link in the description where basically, rather than going through their slides and speculating as to what you're seeing, just watch the video and they explain it. And it's kind of a good update as to what they're doing. And they said that they're going to continue to do these Galactic 10 with Mike Moses updates pretty frequently. So if you're curious about this section, rather than going through all the photos, go to the description, click on the link, and it's a good video to watch. So in terms of the milestones here, 2025, we're in 2025 now. In March, they're going to start assembly in Phoenix, Arizona, and this is, of course, for the Delta class. Summer, fall, and winter, they're going to be building and testing. And then we're going into 2026, so we're looking about a year out here now. Spring, so early in the year 2026, they're going to do their first glide test flight. Summer, they're going to be doing their first research space flight. And then we got to wait all the way until fall for the first private astronaut flight. So I've talked about this a lot before. This is the bit of the concern with Virgin Galactic is how far are these things being pushed out. But if they can keep on these timelines, that would be a good thing. In terms of the financials, we've already talked about. This is the fourth quarter, $400,000 versus $2.8 million prior year period. And this decrease was driven by the pause in commercial space flights, of course, what we talked about last quarter, to focus on the efforts for the production of the Delta class. Total operating expenses were $82 million compared to $117 million the prior year period. And again, like I said, this is reflecting a shift from R&D to capital investments in manufacturing assets to build multiple spaceships. So that's important. That's important to know why that happened. Net loss, like I said, $76 million. Their numbers are slightly off here compared to $104 million a year ago. Adjusted EBITDA of negative $63 million compared to negative $84 million in the prior year. Free cash flow of negative $117 million compared to $114 million in the prior year period. And like we said here, the $29 million in gross proceeds from diluting, issuing shares. In terms of the full year, like I said, $7 million for the full year, and that's primarily due to commercial space flights and membership fees, and those membership fees to be related to future astronauts. Total operating expenses of $384 million compared to $538 million. And again, we talked about why that is. Net loss for the year of negative $347 million versus $502 million the prior year. And so they're saying that's an improvement of 31%. Adjusted EBITDA of negative $289 million compared to negative $427 million in the prior year. Again, a 32% improvement. And free cash flow, again, negative $475 million compared to $493 million in the prior year. Still pretty bad. They raised $138 million in stock. So basically just cash to continue their operations. Again, we talked about what's on the balance sheet here. It's about $656 million. They always put it up a little bit. Free cash flow, like we said, was negative $117 million. And Q1 guidance, again, they're expecting about the same range, negative $115 million to $125 million. free cash flow guidance. And this is the third time we've seen this. So they're doing, at this point, I mean, leave a comment down below, guys, if you're still watching this. There isn't that many updates right now, and they keep repeating the same thing. If there's not that many updates, I might not do as in-depth videos, or I might skip one here and there, because there just generally isn't that much to report on, right? If you want to know about this, watch my last video, go back on my channel, because I talked about this like twice, and basically they're just talking about their economies of scale, right? And how they hope to build that out. Now, just a little last couple things here in terms of the conference call. Like I said, there wasn't really much. We talked about this already. The first commercial research space flight is going to be in the summer of 2026, and the first private astronaut space flight will be in the fall of 2026. This part, I mean, comment down below if you guys know this. They said their last seat sold for $800K ish, up from about $300,000 in the previous year. I'm assuming that's because it was to do with research. Because I'm not too sure if they've actually said, if compared to last quarter, if they're actually going to be increasing those private astronaut fees again. But in terms of when they're going to open up the booking, they're saying the end of this year. They're going to probably opening up the bookings again, maybe early next year. In terms of the guide, so next quarter here, revenue is going to be approximately $400,000 for future astronaut fees. So about the exact same thing. Not much is going to change. They're saying cash spending is going to slow down. So, I mean, did I sell it? No, I still own it. It's just a small little speculative position. The company is really not worth much right now. We're going to have to wait. We're going to have to wait a year to see if they can actually deliver on their promise and see how much demand, how they can actually start implementing these cadences with these flights, and see if we can actually see this start going somewhere, because this has been years in the making. But anyway, I'd love to know what you guys think. As always, don't forget to like and subscribe, guys. Put a comment down below. Let me know what you think. And we'll see you in the next one.